in stock market, your wealth is determined not by the stocks you own, but more by the stocks you don't own. People get excited about cryptos, people get excited about options, derivatives. These are like weapons of mass destruction. You have to have a good credit profile as well, otherwise your bureau score, CIBIL score gets impacted, and later on when you want to take loans, there you will not be able to. While there is always that lure to buy now, pay later, that is something which has become so common these days. You pay your EMIs on time, you should not have too much loans, you should not get into a debt trap or a card revolving trap. There is no point standing on the fringes and waiting for the right time to invest. There is no right time. There is no such right time. Right time will never come. Go slow and get into SIP route or an STP route where you invest at regular intervals without getting actually impacted at all when markets are high or markets are low.
How much percentage of that young investors do you see coming on board these days in terms of as customers investing into a market? Hi, and welcome to another episode of Expert Talk with Bhavya Desai. Today, we are talking about investments. And ये investments का topic इतना important और interesting है because अभी सब नए जो players हैं, सब जो नए youngsters भी आ रहे हैं, everybody is looking to invest in the markets. They are at an all-time high, and that's why मुझे ऐसा लगा कि I should call my good friend Girish Sehgal, who's the head of wealth management at ICICI Bank. और हमने इतनी सारी चीजों के बारे में बात की है, from stock picks as well as how you should invest, what should you invest in, what should be your investment portfolio, क्या चीजें आपको ध्यान में रखनी चाहिए, प्लस आपको कोई चीजों में इन्वेस्ट करना चाहिए कि नहीं करना चाहिए. Very interesting conversation, and I'm sure that you will enjoy it because काफी सारी learnings इसमें से आपको definitely मिलेगी. And also, I'm very sure that at some point of time, I would love to get him back as well because there's still so much to talk about. तो अगर आपको ये वीडियो अच्छा लगा और ये एपिसोड अच्छा लगा, then please हमें सब्सक्राइब कीजिएगा because ये हमें काफ़ी हेल्प करता है आपके एक सब्सक्रिप्शन से. Also, अगर आपको ऑडियो पॉडकास्ट पसंद है और वीडियो देखना इतना पसंद नहीं करते, then we are available on all these audio platforms as well, which is Spotify, Amazon Music, Apple Podcasts, all of these places. So take a look at that as well and see you in the next one. Hi Girish, and welcome to Expert Talk with Bhavya Desai. I'm really excited actually to have this conversation today, primarily because the markets are at such an interesting juncture at this point of time, and more people are looking to invest into the markets, into wealth services and things like that. So that's why there's so much that we need to cover. But before we start that, once again, welcome. If there's something that you'd like to say, then please go for it and then we'll start.
Thank you, Bhavya, and thank you very much for having me here today. Yeah, you are right. It's an interesting phase in the markets. Markets are booming. Every day we hear capital markets hitting all-time highs. But yeah, there are booms and busts which you have to be aware of. And whenever somebody comes and tells me the four dreaded words, this time it is different. So I believe it is never different. Right. It is always the same. So people have to be really cautious as well, while of course enthusiasm continues.
Of course. Yeah. Great. So, in fact, what you just said, in that only there are like 2 or 3 things which I kind of wanted to focus on. Yeah. But before that, there are 2 aspects that I wanted to have this conversation on. One in terms of the narrative was of course from a consumer's perspective. Yeah. Because consumers, kaisa hai, matlab, aajkal everybody is investing, young people are investing, as young as 15, 16-year-olds, like people who are actually getting out of the college, वहाँ से invest करना शुरू कर रहे हैं. And दूसरा थोड़ा सा from a business side as well, because मेरे हिसाब से 2 type के viewer हमारा ये शायद conversation देखेंगे, consumers भी, plus of course the business end people as well. Yeah. So that's what I was kind of looking at. But from first up, very simple, straightforward, can you break down हमारे viewers के लिए कि what is the wealth management service of a bank they do basically? So to keep it very simple for a viewer.
So great question, Bhavya. So let me put it very straight. In stock market, your wealth is determined not by the stocks you own, but more by the stocks you don't own.
Okay.
And most of us, while we see people entering stock markets, everybody gearing and wanting to invest because markets are touching all-time highs, but we don't have enough time to do so much research. We don't have enough time to study about companies. There is always this herd mentality which is in place. People see what others are doing and tend to follow the herd.
Yes.
We also get influenced by a lot of these financial influencers and so-called market experts, and hence want to make very quick buck. And if you have to really make wealth, complexity is never the answer. Simplicity is what leads you to make wealth. And most of the time, the financial advisor or the RM is the right way to go.
Got it.
And because he's the person who can help you, guide you in terms of determining what is your risk appetite. That is one critical element before you should plunge into mutual funds or stock markets. Second is the kind of investable surplus you should have. And third is what is the time horizon that you really look for and want yourself to be invested. And it's always a long term game. And I keep telling all young folks, and there are so many people that I engage with, I keep telling, if you have to get into mutual funds and stock markets and capital markets, you have to have patience, loads and loads of patience.
Right.
And I think patience is a superpower.
Yep.
It's a superpower, and you need to have patience. You need to have a lot of discipline. You need to don't go by what you are hearing and seeing on social media. Take the expert help. If you are not very sure, stay away from some of the risky things. I
Right.
would say people get excited about cryptos, people get excited about options, derivatives. These are like weapons of mass destruction in my mind.
So there is so much that actually a lot of things that you spoke about, financial experts, social media, people giving stock tips and stuff like that. I mean, all of this I absolutely want to cover, because largely so many people who are viewing this as well, or usually are getting into the markets, these are very important things and important information I feel that they should know. But first up, as simple as what you started with, you said the markets are at all-time high. They are, and it looks like the trajectory is going. But do you think it's a bubble waiting to be burst, or how long do you think this will be sustainable?
See, I strongly believe it's a India growth story. India, from a $4 trillion economy, fifth largest in the world, we will soon become third largest, from 4 to 8 to 10 trillion. And when you look at some of the numbers, you have 16 crore demat accounts today.
Wow.
But if you see the investors, is hardly 4 crore or 5 crore. So out of a population of 140 crore, you have 4-5 crore people investing and actively using their accounts. So it's a long runway ahead. It's a long runway ahead. And with the kind of the development which is happening on the infrastructure side, Make in India, the ports, railways, new trains getting launched, airports coming up. I think it's something which is here to stay. It's India growth story, and I'm completely confident that the decade belongs to our country. You might see those, like I said, booms and busts, ups and downs, but if you believe in India growth story, the time is now. Stay put, stay invested, and you will benefit from the power of compounding. I can tell you. That is somewhere I said in my initial thing also, you need to have loads and loads of patience. You need to have a lot of discipline approach, consistent approach. Don't get overbogged by returns. Of course, returns will come, returns will happen. There will be volatility. So I remember, Bhavya, there used to be at least 5 years back, there were clients when markets used to move down. There used to be frantic calls that used to come, and people used to move away immediately. And they were kind of frightened when there was such a volatility or any hiccup coming on the way. But these days, I have seen people are not very afraid. They have actually become more courageous when it comes to markets. They stay put. Haven't seen people calling frantically. They know these are ups and downs and will happen. So I think that is the right way to go as well. You have to be consistent, disciplined in your approach, and stay put. That is the best way. And don't get influenced by the jargons being used. I think the investments are risky only to an extent if you understand what is it and why you are getting into.
Okay.
So that is, I think, somewhere which is very, very critical. And keep learning and keep reading what's happening around you.
Right.
While you might not find time to get into too much of research about a company, what reports are, but be contextual. What is happening? What just have an eye and ear around what's the news. And when you sleep, you end up sleeping a little wiser than you were a previous day. So I think that is something which is very, very critical. And don't have any regrets in life in terms of ये किया था, मैंने invest किया था, ये हो गया था. I think those bygones are bygones. Whatever has happened, and no matter of anxiety or worry can change your future. I think let's live in the present and enjoy the ride. Is what I would say.
But don't you think that ये थोड़ा difficult भी है? Like for example, a investor जिसने पैसा भी समझो invest किया, like you rightly said कि you obviously need to be smart about कहाँ पे आप invest कर रहे हो. But say for example अगर उसने invest किया and then they lose that money because of whatever reasons could be. The company didn't do well, the stock didn't do well, whatever. So then it's very difficult for them to actually forget about that, because while enjoying the ride is great, and जैसे बोलते भी है कि you always enjoy it when it's going up, when it starts coming down is when you.
So the best way to do for a retail investor is adopt the mutual fund route, because here you have an expert sitting, a fund manager who is taking the calls and who is guiding and directing, rather than you yourself doing it, because I'm sure not everyone is an expert directly getting into stocks. So it's always better to get into mutual fund route. That is one. Second, SIP is something which we all know. 25,000 crore of SIP book last month flows in a particular month. In 1 month, 21,000 crore. So 2.5 lakh crore for the year is a huge number which has got built up, and very soon it will become 30,000, 40,000, 50,000 crore a month. So that is the power of retail investing, and that's where I think you end up staggering your investments. You end up riding over the volatility. You are able to do a rupee cost averaging. You are able to patiently just keep investing a small amount which doesn't pinch. You don't even get to know that it's getting invested, and at the end of the day it becomes a huge amount. So I think SIP is something which is the way to go for any retail consumer.
But where is the consumer of today investing? Like you mentioned earlier, that almost 4 lakh crore people out of the 1.4 billion that we have are the ones who are actually investing today, and they have demat accounts. So in that, what is the bifurcation and percentage of where are they investing?
So you have your largely mutual fund. If you look at the mutual fund AUM today, stands at around 56 lakh crore. 56 lakh crore. It used to be in 10 lakh, 20 lakh. It has galloped to a level of 55, 56 lakh crore so soon. And the way retail investors are getting into mutual funds, I think that's the way to go. Of course, we have more and more retail investors also coming into the stock markets, but largely when we look at the clients, they want to get into mutual funds using a staggered approach, whether it's an SIP, even if it's a lump sum approach. Yes, we have seen people getting into those multi-cap, flexi-cap, large-cap funds, and you can't stay away from attraction of those thematic and mid-cap and small-cap, because those funds are giving you a lot of returns today, and there's some froth that we see building up there, and hence we are not recommending any of those stocks to our clients. But a large cap space, a flexi cap space, a multi cap space, a multi asset space which also has gold in it. So I think those are the funds that are safe, and of course nobody can beat the hybrid variety, the balanced funds, which are like the bread and butter, and very good to invest. And I think and I always keep telling my clients, and whenever I talk to my customers, the biggest thing and the most important thing in wealth management is peace of mind. And if at the end of the day, if you can't sleep in peace, then there is no point. If something is coming at the cost of your peace of mind, please stay away from it.
It's not worth it.
It's not worth it at all. So better to have some peace of mind and invest into these funds which are safe, sound, and just let it go and be consistent in your approach.
But from a business perspective, now you mentioned, that this is where a lot of the people are investing. Now, thing that comes to mind is now naturally the services that obviously you offer. A lot of times, naturally, you are sitting on a lot of funds and a lot of wealth, which is taken from the consumer, from the customers of the bank, and that's invested into a lot of these different type of companies, different funds. Now, I was reading recently that a lot of the tips, or if you'd call that, a lot of the direction that a lot of people are saying is that it's not good to now at this point of time invest into a lot of large cap funds. Number one. So, what is the general bifurcation that a fund manager or the services that you guys have usually look at in terms of the portfolio that you want to invest in?
So again, it's a great question, and from a bank perspective, largely when we are recommending the funds to the clients, we largely delve into large cap space. We get into multi cap and flexi cap as well, because a flexi cap or a multi cap by definition would also venture some bit into a small and mid cap as well. So by that fund, you can have exposure across the caps. Basis the risk profile. If you have a growth or a very high risk kind of a profile where you have that temperament to take high risk, and of course high risk high reward game you want to play, then get into those thematic funds. So and thematic can be into a defense space or consumption space or pharma or technology, those themes or sectors, but those are very concentrated play, and hence if you want to get into that, you need to have a very high risk appetite. And so if things go wrong, they will go wrong. So in a balanced fund, what I was explaining, in a hybrid fund or a balanced fund, if the market falls, the fund will not fall to that extent. Your fall will be limited. And if the markets go up, again, your upside would be limited. But then you are relatively safe, where the ups and downs are capped. But in a thematic fund, when things are going well, of course you enjoy. But when things don't go well, the fall is pretty vicious.
But in this case, like for example, when you're saying, whether the fall is vicious or not, does that also mean that in terms of bifurcation for funds also, the consumers always need to put their investments in different places, like how they say that you don't have to hatch all your eggs. What is that option, or what is that Broadway look like?
So see, large set of our clients, we always say you should diversify, not over diversify, of course. You should not have investments across 30, 40, 50 mutual funds, or get into stocks holding 100, 200 stocks. No, please don't do that ever. You should diversify. And by diversification, of course, you have some bit basis your risk profile. There are model portfolios which get drawn out, and basis the model portfolio, there is a fixed asset allocation which is decided. So there is an asset allocation which you should have some bit into equity, some bit into fixed income, some bit into gold and EMS and alternate assets as well. So largely that is how the asset allocation play comes into picture, and we always tell our clients that follow the asset allocation approach. Don't just go blindly by a goal based approach. While I can say ki I have a goal as a youngster, if I am, let's say, 25, I want to buy a house or get into an international holiday 5 years down the line or 10 years down the line, and that's the pure goal based approach. And you want to get into a particular theme and just want to make money and become wealthy overnight. So it's a very, very common saying that if you want to become rich and wealthy, stay invested, do it slowly, it will take 15 years. But if you want to become wealthy quickly, it will take 25 years. So it is always good to stay put, go slow in your approach and build an asset. Do follow the asset allocation approach. You have equity, some bit as an emergency fund in FDs, because if there is a bad times or something that you need for your needs, for let's say emergency needs, somebody is in hospital or something or the other, you need to have those emergency fund with you, which can be in the form of an FD or a recurring deposit in the bank, largely into mutual funds, and again some bit into gold as well, because gold has been also doing fairly well in
Yeah.
last couple of years. We have seen gold moving up, and people have started
Always.
moving some allocation, at least 5 to 10% of their portfolio into gold as well, and then real estate.
Yeah.
is
So
one.
gold is a very interesting topic which I want to come to, because I have a few questions around gold which are, I think, quite interesting. But you spoke a little bit about the young investors as
Yeah,
well,
yeah.
right? Like, how much percentage of that young investors do you see coming on board these days in terms of as customers investing into markets? The reason I'll tell you is because I'll just give you a little bit of context. Now, I know at least 4 or 5 people
Hmm.
who actually, after finishing their graduation, they're so infatuated by markets and possibly also doing well
Yeah.
by their own standards. They say that we are doing really well
Yeah.
in terms of whatever they're investing. They actually don't have too many plans to really study further, and they want to do something in this direction itself. Do you think that's viable? Do you think that's recommendable as well?
See, I know there are a lot of young people jumping into the market because one, of course, the markets are doing well, and anything that you are touching is turning into kind of gold, and hence people want to come into and enjoy. But that is something that we have seen. But as a young investor, I think few things which are very clear and you should keep in mind is my take clearly. Like I said earlier, also you need to have loads of patience. Have a disciplined approach. Be consistent in your approach. Don't have any fear of failure. Of course, there can be ups and downs, but be courageous. Stay put. And there is a lot of synergy, and I keep telling there's a lot of synergy between markets, between your personal life, between your health, between your jobs. All these are correlated. Just so if you say if I want to be healthy, I have to go to the gym, then you have to go to the gym daily. You have to show up daily. You just can't do once a week or twice a week and then stop it. So your health will suffer. Similarly, in your personal life also, if you have a family, you have to show up to your family every day. You need to take care of them every day. Similarly, when you are in your job, you have to show up every day and you have to be at it every day. So that's how it is. And similarly, in markets, you have to be there consistently putting small amounts, whether it's a STP approach where you are staggering and slowly your funds are moving into, or an SIP approach where you are consistently putting in, and hence that approach, that systematic approach, that consistency will always help. There are certain things and pitfalls which you should completely avoid. You should never have that sense of entitlement. You should never have any negativity if something has happened, or anything that fear of failure. I would say never ever go and use that approach, and whatever that you are earning. Again, I would say there's a very simple rule: 50% for your roti kapda makan dal chawal. 50% should get there. 30% should be for your when you want to dine out, when you want to go to a movie, when you want to travel abroad. That is your 30% share. The remaining 20% you should end up saving and investing. Well, that is for sure. While
Isn't 20% too less though? Because I think in today's day and age, especially with the way the trajectory is going for all, everything is getting expensive. Isn't 20% less?
So there is one element which is why I say 20%, because there is one element which contributes is your loans. Then people tend to take loans, use credit cards, have their EMIs running. So that's also one large element which you can't miss. You have to have a good credit profile as well. Otherwise, your bureau score, a CIBIL score gets impacted, and later on when you want to take loans, there you will not be able to. So while there is always that lure to buy now, pay later, that is something which has become so common these days, the BNPL phenomena. But somewhere I think you have to also ensure that you pay your EMIs on time. You should not have too much loans. You should not get into a debt trap or a card revolving trap. So those are the things that you should avoid. But yes, there are some loans which are always running. There can be an education loan running for a young investor. There can be a car or a two-wheeler loan running for somebody. So you have to take care of those as well. So 20-25% is something, if you can actually save every month and get that getting plowed into markets in a SIP or an STP route, that will always result in a good compounding.
But tell me one thing. Now so in that case, should somebody buy a car which is on an EMI, or should they buy? The reason I say is because I was reading about a very interesting article that I came across a few weeks back, where they said that in a debt trap, if you really don't want to get stuck in a debt trap, then one of the most important things is actually to not get in new cars because of depreciation. You know,
Mm.
so is there any truth to that matter, or?
You see, one is, while loans are, of course, people want to take loans and want to buy these amenities, of course. But my only advice is always कि a smaller loan is a debt, but a heavy loan or a larger loan is an enemy. So be very, very careful about it. And I think to your earlier question where you said कि 20% is good or bad, let's take an example. Let's take let's take three people, and let's say let's name them as the three characters which were there in Three Idiots.
Right.
So one is Rancho, the smartest. One is Farhan, and one is Raju. So Rancho starts investing, let's say at the age of 25, 10,000 rupees a month. That's it. Okay. Farhan starts investing at the age of 35, and Raju starts investing at the age of 45. Same amount, 10,000 rupees a month, and let's say assume the return is very conservative and at 10% per annum. That's it. And retirement age is 58. All three are salaried, let's say. So somebody who starts early at 10,000 rupees a month at the age of 25 has 33 years. It's a long runway ahead. So by the time the person retires, even at a rate of 10,000 per month, he would be able to accumulate 3 crore plus just by putting in 10,000 per month. Farhan ends up putting around 1 crore because he started 10 years late, and hence look at the impact from 3 crore to a 1 crore. And somebody who started investing at the age of 45, he would end up somewhere around 30 lakhs. So while money would have doubled, tripled for everyone, but in the case of first, which is Rancho, who started early with a smaller amount, gets a return which is 5x, 6x, whereas Farhan gets a return of, let's say, 3x, and Raju gets a return of only 1x. So the earlier you start, even though it's a smaller ticket, but consistent, you don't don't miss out in any of the months. It's consistently done, patiently done every month without looking at your portfolio. And of course, one key thing which we keep telling our clients, you need to continuously have a look at your portfolio where your RM comes into play, the relationship person, product specialist, and he will do a portfolio rebalancing in case it is needed, some trimming, something or the other. But largely, if your investments are done in decent funds, you don't have to do too much. Lot of clients at times come and ask us, "अरे portfolio आपने देखा, आपने तो कुछ change बताया ही नहीं." But we really don't want to do for the heck of it. We really want to suggest a change if there is a need. Otherwise, you continue these funds for a longer period. And whatever that we do, we will always tell them to stay put for a longer duration. Don't jump the ship off and on. That doesn't help at all.
Yeah, because the barrier for entry also is much lesser at that point, right? Because when Rancho started investing, the markets were really less.
Whatever.
Yeah, so naturally the NAV that he would have got, he or she would have got, would have been far better than what the others will get.
Yeah.
You know, investment you're speaking about, what is better, lump sum or SIPs?
So my take again, I have a soft corner for SIPs, clearly, very, very emotionally, because I started my SIPs quite late. So frankly, I moved in, I started handling wealth in 2011, and hence that time, I think a year or two I started and have been doing my SIPs regularly. I still wish somebody would have guided me and told me when I started my career in early 2000s, you start doing your SIPs. I don't know. The corpus would have been far bigger and better. So my vote goes for SIP without a doubt. Of course, lump sum is important. Again, two approaches. Lump sum, one is, of course, you can always go for an STP approach where you put your money into liquid and staggered form systematically. It moves to the dedicated target scheme. That is one way of doing. And in case there is an opportunity that you find where you want to invest and markets are doing well, those funds are doing well, but never forget whatever mutual fund that you get into, one, you should look at the pedigree, the management, how good, bad. Second, the AUM size, how is the fund size. So do that basic stuff. Don't again get influenced by what your friend or peer or neighbor is saying. The ultimate aim is not to beat the returns which your neighbor or friend or peer is making. The
Right.
ultimate aim is to beat inflation, and let's be happy about it. The more the merrier, whatever that you get, but keep your expectations within control.
But where
within
does the
your-
consumer really do most of this? Like you're saying that you need to look at some of these aspects. Now, let's take an example of someone like me. Of course, I do SIPs, I do investments as well. And as you said rightly, that I've staggered
Hmm.
my investments into a number of things
Sure.
for obvious reasons. But the thing is that because you naturally have a busy lifestyle, you have work,
Yeah.
you have obviously other things to take care of and things like that, a lot of times it's extremely difficult. And I'm sure I'm just
Yeah,
one person
yeah.
out of millions of consumers and customers who are like me.
Absolutely.
So how do you really do that? I mean, usually then don't people follow onto like take advice from people like you, who are friends, or take advice from peers and things like that? ये तो common है ना, मतलब इंडिया में ये तो होता ही है.
होता है, and I don't deny it completely. होता है. When you hear on social media, on WhatsApp, some of your friends talking about a particular stock or fund, तो आपका मतलब you get enticed and lured to buy that. अरे इसमें invest किया तो ये तो एक साल में इतना हो जाएगा. So those are the things that you, as a human,
Right.
it is something which comes naturally and you can't avoid it completely. But in all these scenarios, since everybody is busy, everybody is running a hectic life, you don't have time to do all this research. Here is your RM or the advisor comes into play, and largely an RM. At least I can vouch for our bank where we don't have any incentive structures where RM would advise a particular fund or recommend a particular fund because of having an variable pay or incentive for that fund. No, there is nothing. So we don't do that. It's purely basis being fair to the customer, at the same time being fair to the bank. So fair to the customer, I think, is something which holds the key. And any product that we would advise or we would recommend would always be something that we can sell or we can pitch to our family and friends. Something which I can pitch to my family, the same that we should give it to our clients. I think the underlying is always truth, trust, and transparency. That is, I think, completely as an underlying mantra, theme, Bible, whatever that you say, truth, trust, and transparency always prevails, and that is where your trusted advisor comes into play and he will guide you.
You know, what you mentioned actually brings me to a very interesting idea. Now, naturally, broking firms or securities and things like that, like banks like you, of course. Then there are startups, like your examples of Zerodha and XYZ.
Yeah.
And business works on profits. Let's be very honest. Nobody is doing anything for charity. It is. But a lot of these startups actually claim that there is zero brokerage, like Zerodha and XYZ. How do they really make money if this is what they're offering?
So I think in a recent circular which has come from SEBI, where they have eliminated from 1st October the volume-based discounts, which a lot of these brokers used to enjoy, and largely the volumes used to come from derivative trading, and people whole hog into futures and options. Although 97-95% don't even make any money in FNO, and they don't even ever get to beat FD returns. While on social media, people might come out as tom-tomming about their returns and XIRR that they are making, but largely what we believe is something which is not there. So with these volume-based discounts going off, it is a level playing field, one. And while these volume-based discounts were there, they used to subvent on one area, and they used to offer zero brokerage on equity as a subvention. So while they were being charged on one side, they were trying to subvent on the other side, and they were getting discounts as well because there was huge volumes which are coming on FNO side. So now it's a level playing field. That is one. And secondly, I think I again keep saying ki, don't get into just by there is a brokerage charge which is there, or there is some charges which are getting levied. I think one should always take the advisor route, an RM route who can actually guide you, take care of your portfolio, who can come and tell you that these are the mistakes to be avoided, and try and keep rebalancing your portfolio. And then you can leave it to him. The person is an expert, and like a mutual fund, where the fund manager is an expert and he's doing it on your behalf if you have taken a good fund. So it's like leaving the difficult job to the expert, and you of course keep reviewing your portfolio. You should just leave it to them. You have to review regularly.
But सबके पास तो नहीं होता ना relationship manager also. Like for example, naturally RM services also comes when you have a specific type of an account, or you've obviously given a at least a reasonable amount of business to the bank. So then,
so like if you most of these if you go to, let's say, ICICI Direct, which is our securities portal,
yes,
there you have those baskets or one-click equity baskets are there.
Yes.
So if you see those baskets, if you are struggling and you're not deciding where to go and what to invest into, of course, mutual fund is one way. Second way is if you want to get into a stock SIP or a one-click portfolio, which can be a Navratna kind of a stock for PSU basket, or a bank basket, or a MNC basket, multiple baskets which exist, and you can of course get into those baskets, opt that basket, and your money will start getting into those baskets at a regular interval, similar to an SIP. So there you don't have to tinker too much or apply too much of a logic. You can just opt that basket because the returns are there, clearly specified in terms of what kind of returns those baskets give, and those are good enough in terms to start your investment journey.
Got it. So, yeah. F&O you spoke about, yeah. It's such an interesting topic. First is, can you just break down what is F&O for the viewers first, and then I'll ask a follow-up question.
Futures and options largely gets into leverage. So if suppose today you have invested 100 rupees in stocks and the markets go down by 10%, so you still end up getting 90 rupees, which is your capital, and you while you have incurred some loss, but you still get to recover large portion of your capital. Let's say 10%, 20% market gira, तो भी 80-90 रुपए आपको मिल गया. But in an F&O, you end up losing the entire money because there is an underlying leverage which is there 6 times, 7 times, 5 times, and hence it's a very, very risky proposition. And in words of Warren Buffett, if I can quote, I was telling earlier also, these are weapons of mass destruction. So one should stay away from F&Os. Just stay put and stay invested in a very simple way and have some patience in life. Don't try and become wealthy or rich overnight. Have some patience, and I can tell you a story from small story from Mahabharata.
Please.
So we all know Ashwathama came to know कि द्रोणाचार्य जो उनके फादर थे उनको मार दिया, and that was by way of a झूठ which Yudhishthir had said कि Ashwathama हाथी मारा गया, which was and hence he thought it's Ashwathama, and he dropped his weapons and he died. And Ashwathama came to know of this. He became very angry and he was very, very brave, and so he shot at Pandavas something called a Narayan Astra. And that Narayan Astra started killing everyone. Whatever soldiers were there, if they had some weapon in their hand, started killing everyone. One by one, they were all falling down. So Lord Krishna said, just put your weapons on the ground, hold your hands, and don't even think of war in your mind. If you think of war in your mind, you will get killed. Just put your weapons down and stand with your folded hands. After some time, that Narayan Astra also subsided. So the biggest learning from this is, in anything, whatever that you do, whether it is capital markets or corporate life or whatever it's personal life, at times, most of the time, be patient. Just put your Astra Shastra down and wait for an opportune time. Don't be in a hurry to retaliate. I think that is where I would say to all investors, whether young, old, whoever it is, avoid these F&Os, avoid all these risky bets on cryptos, etc. just take your time, get into simple SIPs, get into simple mutual funds, get into stocks if you want to, and if you're expert and you believe you can handle stock markets, then get into stock SIPs or one-click baskets which are available. But don't get influenced by whatever they're hearing around you, the social media, financial influencers, market experts. Please, please don't get enticed by whatever they are claiming. Have some balanced head on your shoulders. Please have some patience. I think that is the biggest learning that I have seen in my last 14, 15 years that I have done. I have been in wealth. I think that is something that takes you a long way. That
Okay.
takes you a long way.
But surely there must be some percentage of people who must be really doing well as well. Because like you said, in terms of FNO, what I think my estimation is also almost above 90% or maybe 95. They just get wiped off.
Yes.
If it's great, it's great. If it's not, then you completely come down to bare bones and it's difficult.
So of course, there are people who would, but that's a very small percentage, and they are the trader variety who do this only for their bread and butter. It is not like you and me. We have a family, we have a job, we have to work. There are so many things that we have to do. It's not that I wake up early in the morning and start looking at the markets, and throughout the day I'm in the market. At night I'm looking at SGX Nifty, how that is doing. In the morning I'm looking at Dow futures. No, if that is the seed, then boss, there is no peace of mind. It's not worth it if I'm doing that. So better you lead a wholesome life, have your hobbies in place, enjoy with your family, friends, everything, and invest, of course, with peace of mind. I keep saying this, and have that RM to do the job, and invest into simple things. Don't get into complexity. Complexity will always make you look intelligent, but simplicity is something that will make you wealth.
Nice.
So
now, Indians traditionally always invest a lot. Like we spoke about gold, like I told you, I have a few questions in that respect and some conversation.
Yeah.
But Indians always are traditionally हमें हमेशा बताया गया है कि invest करो gold में and real estate में भी.
Yeah.
Because those are usually things which are safe and they're always going to grow.
Yeah.
Is gold still a very good investment today?
Yeah, we do advise, like I said, our clients to get into some portion of their portfolio into gold. Gold has been doing well, and traditionally, like you said, Indians, and I know there are two things. One is this Dhanteras. Most of us दिवाली के बाद धनतेरस है, and हमने देखा है हमारे mom dad, they used to go to a jewelry outlet and buy something or the other. कुछ नहीं तो एक सिक्का तो खरीदना ही है लक्ष्मी जी गणेश जी का, वो होता था, and that is so true, and that tradition still continues. Second is a festival called Akshaya Tritiya, where we go and buy gold, and Indians have that knack, and I have so many friends around me I know who keep buying gold because they are preparing for their daughter's marriage or son's marriage right from the time when their sons and daughters are 10 years, 15 years, and still a long runway to go, but every year they are buying gold because that's what it is there in their mind.
Right.
वो रहता है gold, of course, but I think times have changed, and some of the new forms of investments have come in, and there are 2-3 things which if you go and buy a physical gold, one, there is always doubt on the purity unless you buy from a very good outlet, and there too you need certificate and all, so that the purity thing always comes into play. Second, storage, fear of theft, then you lock it down in your lockers and all that which will happen, and when you go and resell it, then there are again you don't know how much value would you get. Are you able to get a decent value? And if you're buying jewelry, then there are those charges which are markup charges which get applied in terms of making charges on jewelry. So there are elements around it. So something that we have seen of late and is sovereign gold bond, which has come into play, and personally I would advise my clients to put some money into sovereign gold bonds as well, because one, while it's a 8-year lock-in kind of a product, but whatever maturity value after 8 years. So today, if gold is, let's say, X rupees or 100 rupees, for example, and after 8 years, let's say gold becomes 200 rupees.
Right.
So whatever gain that you are making, that is tax free. First and foremost, the maturity value that you get is tax free. plus every year you get a interest which is 2.5% on that. So that's paid half yearly. So that is of course taxable, but there is an interest element which you keep getting every year, plus you get a maturity value which is tax free. So any investment, I think उसका बहुत ही ground rule है. There are three parts. अगर आप उस पे उसको देखोगे ना तो आपको पता लग जाएगा. I call it SLR. In our parlance we call it SLR: safety, liquidity, and return. So gold bond safe है, returns अच्छा है, liquidity I would say is not very high. You can't, because it's a lock-in product. While
And 8 years.
8 years is a long time. After 5 years you are allowed to do redemption, but even 5 years is a long time, and trading is difficult on exchanges. So liquidity का definitely issue है, but safety and returns, and if you have time horizon, if you are, like I say, you have a long runway ahead, then SGB is the way to go. You should have some portion of your allocation in sovereign gold bonds, clearly in sovereign gold bonds.
So, for the benefit of our viewers, if you can just say what exactly are sovereign gold bonds and how do they work?
So these like the name suggests, sovereign. It's a government issued bond. It's a guarantee bond. So there is no issue in terms of safety of the bond, 100%, because it's a sovereign. By the name it suggests is a sovereign. So it's a bond just like you buy any other bond. So it's a simple bond which is issued by the government, by RBI. You get a proper physical certificate on buying a sovereign gold bond, and you can also opt for a demat option, and those bonds value reflects in your demat account like any other stock or mutual fund, and you can see what is the value every day. So you can see how much the value has grown as well. So there, it's very transparent.
So Girish, SVBs versus gold, what is a good bifurcation or investment?
So like I was telling, and from a physical gold perspective, being in India, in our households, we keep buying gold, whether it is Dhanteras, Diwali or Akshaya Tritiya. We have been attuned to buying gold from our parents since we were kids. We were always going to a Sunar and buying at least one gold kasikka with Lakshmi ji, Ganesh ji. So that is always has been the normal tradition. Those are the values that we have got inculcated in ourselves. So that is somewhere I think all Indians have that affinity towards buying physical gold. But again, if you buy physical gold as a portfolio allocation, yes, if you see there are problems in terms of storage, theft. When you buy, you are not sure whether it is pure. When you go and sell, then there are issues. While you are able to sell, of course, but you are not sure whether you got the right price. And then if you buy jewelry, then there are those making charges which get levied, and hence to that extent there is something called sovereign gold bonds which have come in. Now these sovereign gold bonds is something, a very easy way of investing. You can just go on a bank's website, our bank, both on digital platforms, whether it is iMobile or our internet banking platform. You can go and buy sovereign gold bonds, and the biggest advantage is one, you can get them in your demat account. You can see daily the values moving up, down, and largely the gold has moved up in last few years, and you can see that value moving up, and that is the easy way of doing it. The only disadvantage to that extent is it's something which is a lock-in product, which is an 8-year lock-in. So in terms of liquidity, while comparing a physical gold with a SGB, a physical gold is far more liquid, while an SGB is not so much. You can of course redeem it after 5 years. On the exchange you can sell it, but again the liquidity is an issue. So that is somewhere which is a issue. But in terms of SGB, when you buy today, let's say 100 rupees, and in 8 years if it becomes 200 rupees, the gain is 100. That gain is all tax free. The maturity value is all tax free, and hence that is one of the key areas why one should get into a sovereign gold bond. And in addition to the maturity value being tax free, you also get interest at the rate of 2.5% per annum, which is paid half yearly. So that's an additional interest that you get, and that interest of course is taxable. as per your slab, but interest is there plus the maturity value which comes at the end of the maturity period, which is 8 years. So we have seen large set of customers getting into sovereign gold bond, and it's safe, as the name indicates, sovereign, government guarantee. So and you can see it in your demat. You get a certificate from the regulator. And
what does the government use SGBs for?
Yeah. So largely, when you get gold, you use it for a couple of purposes. One, of course, is the entire developmental stuff which happens around, which the government expenses or government expenditure, largely that is the gold is being used. And second, of course, we being Indians, like we rightly said, we continue to buy physical gold, and there is so much of import of gold which keeps happening, and that is expensive, and hence to curb down that gold imports, we are encouraging, government is encouraging SGBs.
So in principle, it's a good idea to actually invest into them, especially from a safety perspective, because they are actually guaranteed by the government, plus you get interest as well on them.
Yes. Completely 5% of your portfolio, anybody's portfolio, should be into gold.
Wow. Okay. But you said 8 year is the minimum lock-in, or 8 year is the lock-in. So is it like a minimum lock-in, or is it like a 3 or a 5 year?
5 year is the minimum lock-in. 8 year is the regular maturity. So after 8 year, the maturity value comes in your account.
So technically, somebody who's investing 100 rupees per day, per year, then they have to invest 500 rupees for 5 years. And then at the end of the next 3 years, until 8 years, they can just enjoy. It's basically no investment of premium.
I always keep saying, and that's the benchmark that we use, SLR framework, safety, liquidity and return. So from a safety perspective, scores very high. From a return perspective, largely decent, but liquidity would be somewhere in the middle. So if you compare it, let's say with an FD, a bank FD, very high on safety, very high on liquidity, very decent on return. So I think safety, liquidity, returns is a benchmark which can be kind of used by any investor when they are trying to weigh what asset class or what options they want to get into.
Understand. Now you mentioned earlier about a lot of these financial experts, and it's not always the best option to possibly look at, especially on today's social media. That today's day is actually about instant gratification. Let's be very honest, right? Everybody wants like get in and fast out in that respect. So how do you inculcate that patience into a consumer today? Is it even possible?
So I know it is difficult. I know it is very difficult, and especially the younger generation, it is very difficult. People are living a very fast life, and everything is Insta, whether it is Instagram or instant coffee or anything and everything. It's all Insta, and people really want to make quick buck. That is where the tendency is.
Right.
But somewhere I think when it comes to investments, and if it's people will have to remember that it's a long run game. There is no shortcut here. There is no shortcut here. Again, let me tell you, I keep telling this, you have to be a very stable in your attitude. जैसे कहते हैं ना, ठहराव होना चाहिए. आपने इन्वेस्ट किया है ना, तो आपको एक ठहराव बहुत जरूरी है. You can't do things very quickly and ensure that this has happened. So it is like बोलते हैं ना कि बनाया है हमने ये घर धीरे धीरे, खुले मेरे ख्वाबों के पर धीरे धीरे. So anything and everything which happens slowly and steadily. I think that is one trait which everybody should have, because markets is always a long-term game. It's not a short-term game. While you might end up making money sometime or the other, but at times when it doesn't happen, you have to stay put and just play a long-term game. Again, I can tell you a very small story. I'm sorry.
No, it's very interesting. Please tell me.
So I keep telling my team as well. There was a farmer. So he had उसके पास एक घोड़ा था, and that घोड़ा was very healthy, very good, very strong breed. And lot of people in the village, they used to come to him and tell him, "अरे यार, you are very lucky. आपके पास तो इतना बढ़िया एक घोड़ा है, and he helps you in plowing the field, and you're so lucky." And the farmer was like very patient and always very grateful and humble, and said कि ठीक है, देखते हैं. no reaction. Well, they were, it's like financial influencers coming and influencing you, but he was like, dekhte hain, karenge, अच्छा hai, thank you. But he was never getting excited, overexcited. So what happened was that you are very lucky, all villagers used to come. So one day that horse ran away. So then again the villagers came and said, "Arey, you are very unlucky. So yaar, आपका तो एक तो अच्छा घोड़ा था," and people used to look at it, but that also ran away. So the farmer again was nonchalant, and he said, "कोई बात नहीं, सब अच्छा होगा, रब अच्छा ही करेगा. We'll see. Let's be patient. Let's stay calm and composed." So then they went off. Then after a few days, that horse came back, and he came back along with 3-4 more horses of similar breed, similar strength. So then again these villagers came and said, "अरे, आप तो, you are super lucky. You are so ये वो, अभी तो आपके पास एक घोड़ा नहीं 5 घोड़े आ गए. This is so good, and you are amazing." I said, "Don't worry. Let's be patient. सब ऊपर की कृपा है भगवान की. We will see क्या होता." So he was again not non-challenged in terms of what's happening, positive, negative, very balanced. Now, what happened was, since he had these horses, once his son was riding the horse and he met with an accident, and his son became kind of handicapped. His leg got injured very badly. So again those villagers came, "अरे बहुत दुख हुआ, ये आप ये घोड़े ऐसा ही करते हैं, you should let them go, and this is what is the cause of your sorrows and concerns." So the farmer said, "Let's stay put, let's stay calm," and he was like nonchalant again, very stable head on his shoulder. They went off. Then there was a war which happened, and there was this general which was trying to recruit more and more people in the army, and he came to the village, and all male members of the village were taken by force to the army, except for this farmer's son, because he was handicapped and he was injured. So he escaped, and then again these villagers came and said, "Arey, you are so lucky that your son escaped." But he was again very calm, quiet, patient, continuously, constantly doing what he was doing. So this is like why I keep narrating this story, is there would be those events which would keep happening in the market.
Ups and downs.
Something which is very good, something which is not so good. We should not react at every instance and every incident कि आज market ऊपर है तो मैं profit book कर लेता हूँ, आज नीचे आ गया है तो मैं क्या करूँ, मैं डर गया, then I take my money out. So all these kind of instances will continue to happen. I think the biggest thing is let's be stable, let's be patient. It's not like a घड़ी का जो pendulum होता है कि it goes one side markets are high, it goes other side markets are low, but there is also a neutral element which is there.
Right.
So I think something which is badly needed in investing journey and markets is people should have a stable head on their shoulder, some therav, which is necessary in investing if you really want to make good returns. Be patient in life, and I think that is where the difference lies. You can't be just hopping in, hopping out. And I keep saying, whether it is your job or whether whatever that you're doing, even in jobs also, I've seen people hopping in, coming, don't spending too much time. So when you spend time in the organization, then only you grow, you build your equity. It is like similar in the market as well. You spend time, you will see the equity growing. If you just continue to get influenced by what's happening around you, then you will never grow in life. So that is where I think there are so many similarities when you look around, and you can weave those similarities everywhere, whether it is personal life, professional life, your health, wealth, anything and everything. So that's
absolutely. I mean, I couldn't agree with you more, because there are so many nuances that which actually you can pick up, and then those also resonate in terms of whatever you can apply in terms of so many learnings that you actually do in that respect. You know, you mentioned about whatever this patience, and of course from that, and at any point of time, if you want to anytime narrate such a story, I'd be more than happy. So please don't be sorry about it, because it's very interesting. And it's always good, you know, because you're able to connect things so much better when it just puts it into perspective. But from a youngster's point of view, you know, as you said, it's a lot more of instant in that respect. What are the 5 things that a young investor today needs to look at when they're looking at stocks?
See, one, clearly for any young investor or anyone for that matter, I think learning should continue, and reading, learning, you have to be a student forever. Anything and everything you keep learning. That is the biggest thing, important thing that I would say. Second is, like I said, never have any regrets in life. Whatever that you are doing, a good day will always bring happiness. A best day will give you good memories. A bad day will give you some bad experiences. A worse day will give you lessons in life. So never have any those regrets in life. Be humble and just surrender yourself to the market. You just can't go and say ki I know everything and I will be able to maneuver the market because I have made some money. Let's say for one or two instances, you can't become an expert. Rely on the advice of the experts and please hear them out. Don't assume that you know everything. I think that is the third thing that I would say, and keep learning, keep honing yourself, keep ensuring that you keep learning anything new every day. We all are learning every day. We are all students forever. So there are few things like you were asking about what investors, whether it is young, I would say, or anyone.
Five things that.
So one, of course, we should keep learning. Any investor should be aware of what's happening around, and they should keep learning, and they should, when they go to bed, they should be a little more wiser than what they were a day before. I think that is something that is clear, because whenever you come around any large and any big personality, they are all learning machines and they are always learning something, always reading, learning. So that is one area I think which everybody should be aware and should be. Second is they should be consistent in their approach, very disciplined. And we keep hearing, and when we were in school, I remember जब मैं 5th class में था तो our teacher used to tell, and I'm sure आपने भी सुना ही होगा कि fortune favors the brave, luck always favors the brave. So that is where I think the luck will come into play only if you are courageous, if you are disciplined, patient, on time, and use that consistent approach and put in a hard work. That is clearly one of the key traits that I would say people should have. Third, I would say they should not get influenced too much by what is happening around them. They should not blindly chase performance कि इसमें यहाँ पर मुझे इतना रिटर्न दिख रहा है तो मैं भी यही करूँगा. Avoid that herd mentality. वो bias है completely बहुत and everybody tends to do, and we have so many groups on WhatsApp, ये वो college group, engineering group, MBA group, school group, and everywhere market and politics. I think these are the two things which get discussed everywhere, and markets being the top, I would say. So somewhere don't get influenced by what the performance is, and don't chase performance. Continue to do and go with your goal and objective in mind with a consistent approach, and don't have any fear of failure or regrets in life. That is what I was saying. A good day will lead you to happiness. A best day would lead you to memories. A bad day would give you experiences, bad experiences, and a worse day will give you lessons. So at the best, don't have any regrets in life. Don't have any fear of failure. Be courageous, be optimistic. I think that is very, very important because a pessimist will always sound intelligent. When you talk to a pessimist, you will come back कि हाँ boss, ये बहुत intelligent बंदा है, पर पैसा optimist ही बनाता है, because he believes, and that is where the India growth story and other things come in, because you have to believe what's happening around you, and you have to believe that you will be able to make it, and you will be able to go through this journey. So that is where I think always be courageous, leave aside this fear of failure and etc. etc. And while investing is one part, from the life in general, cut out negativity, cut out toxicity, cut out all those negative traits. I think put your life into a lot of more happiness, optimism, positive behavior, positive traits, and things will always turn around positive for you. So I think those are some of the things that I would say to any investor.
You speak about like optimism, right? It's so interesting. Do you believe in like the red car theory? Do you know the red car theory? The red car theory basically is that, you know, like a simple question that did you see any red cars today when you were coming here?
Achha.
Yeah.
No, I didn't see.
No? Okay. So what if I tell you that now when you're going to leave, you actually know about the red car theory, then there is a possibility that you might attract or see or try to spot some red cars. You know, so they say the red car theory is very similar to actually how luck and optimism works. It's like when you know something before you're leaving, then you attract that sort of energy, that sort of luck, that sort of, that's how luck works, they say. So that's the red car theory. So now that you know and you're going to go back, so you're going to hunt for a red car possibly, as opposed to when you came in here, you're not actually looking for a red car. So it's very interesting when you speak about optimism, because it's like luck attracts luck. When you're in a positive mind frame, it actually attracts that as well.
Yeah, and so when you talk about luck, I can't resist myself by telling you that I have read about types of luck.
Okay.
And these are something very interesting.
Yeah.
So there is something called an umbilical luck, because that's the parental luck, the place where you are born, your parents. That is the luck, and you can't control that.
Right.
But lot of it is decided by the place, by your parents, the kind of culture, the kind of sanskar, ethics, integrity, things that they values, which they imbibe in you. So that is one side of the luck, which is not in your control, but that plays an important part, clearly an important part in terms of my mom was a physics lecturer, so I always was very good in physics, and we were exposed to the books in the college library, and there was a mahal of studies. दिन भर हम मतलब questions ही solve करते रहते थे, and that was the natural intent and attraction towards solving complex issues and problems in physics. So that's one luck which is not in your control. The second luck is like which is because of some talent that you have. These are the prodigy luck, which again very few would have. A Lata Mangeshkar or a Sachin Tendulkar, not you or me or anyone can become one in so many millions. There's only one Sachin Tendulkar or one Lata Mangeshkar. So that's one luck which is again not in your control. One luck, the other two which are within your control is something luck by motion, luck by hustle, luck by execution. So there are people around you in your team. Of course, you also run a company, Bhavya, and you would have your teams around you. There would be set of people within your team who would raise their hand and say, yeah, I would do this. And anything and everything, they would be the first people to raise their hand and say, okay, I'll give it a shot, I'll try. Those are those hustlers who want to execute everything, and you love them. You really love them, and you want executors in your teams. And I have so many in my team who want to take those ownership, responsibility, accountability. Yes, I want to do it. So that's luck by motion, and that creates that positivity, optimism. The more you create those motion, you get more and more chances to portray yourself, to be in those difficult situations, come out with flying colors, and then your supervisor and everybody feels happy about you, and you create your equity in the system. So that's luck by motion. And the fourth luck, of course, is when you know certain things and you try and practice those things and become an expert in that particular area or particular domain. Again, within your control largely, but the luck by motion is something which is there for anyone and everyone. And I strongly believe if you are a good executor, if you create that positive energy around people, if you are very optimist, very optimistic, strong believer, then you will see things falling in place, largely falling, whether it is markets or anything, you will see things falling in place. But you have to be a strong believer. Like you said, the red car theory, I will definitely try and spot a red car.
So, I had a few more questions on the business side as well, actually, because I think from a consumer's perspective, I think they also understand a lot of things, but from a business and also there are some questions which are in my mind, or some topics at least I'd say. What's the ideal P sort of a ratio, because that's something which is extremely important, right, for anyone who's especially at your end of the business, that people should really be that you look for.
Those are again related to stock picking questions.
Yes.
Bhavya. So I would like to refrain myself from such questions, because, and again, the P ratio varies from company to company, and there are performing companies who are doing well at a very high P ratio also, and at a lesser P ratio also companies can be picked and done well. So it is not one of those key factors when you start picking a company or picking a stock. Is this the only thing? No. There are multiple other factors: your return on capital employed, return on equity, how is the turnover, how is the bottom line growing, what are the kind of margins that a company enjoying, what is the kind of debt equity ratio which the company has, what are those terms of trade which a company has in terms of your company, let's say when you are supplying certain things to your buyers, what are those trade terms, how many days debt or credit that you offer. Similarly, with your suppliers, are you giving payment immediately or you are buying time? So those are some of those nitty-gritties which get into when you get into those picking of the right companies in terms of how they are making their entire money. So those are the questions that a fund manager largely gets into and do those research in terms of so P is one factor, price to book or price to earning. There are multiple those ratios which people can refer to, these are not the only ones. So there are multiple things that go into selection of a right stock or what constitutes a good company to invest
But
in.
a lot of actually the experts that we talk about, the so-called experts that we talk about, whether on social media or even in general, these are the sort of reference points that they actually use a lot of times. Is it because it's difficult for the consumers to understand it?
I keep saying कि investment is only as risky as till the time you understand it and you know why you are getting into it. Don't get influenced or don't feel that investment is risky because of the jargons being used by these financial influencers or market experts, tom-tomming about their jargons on social media and then getting into the kind of returns that they are making. So I think we should completely be avoiding those media financial influencers.
So-called experts.
Actually, had they been so expert, they would not be just on social media. They would be doing far more and important things because being busy is not just being productive. You are busy on social media. That doesn't mean that you are productive and efficient.
Right. Right.
That's
So-
how it is.
Another thing that actually just came to my mind is like, the concept of miss the bus, which happens to a lot of investors. Yeah. A lot of times, as we spoke about peer pressure and stuff like that.
Yeah.
Now, say for example, somebody enters a stock, say Reliance, when it was basically 3 or 4 years back, when it was like running at 400, 500. Some people entered at about 1000, 1100 as well.
Yeah.
Now today, of course, it has rallied like crazy. A lot of times you meet peers, friends, when somebody misses that bus, say at 1000, call was at 1000. Okay. How does the investor go about if he or she wants to invest in that product?
See, frankly, again, these are very far and few examples. Nobody can ever time the market. Nobody. If somebody claims that he can time the market, I can only enter the market when markets are at all-time low and book profits when markets are at all-time high. That is very, very rare. Nobody can do it. If there can be, of course, 1 or 2 examples that we keep hearing, but there are 100 other examples, like you rightly said, where people have really missed the bus. And there are many more such examples which would come, many more companies that you can invest. There is no point standing on the fringes and waiting for the right time to invest. There is no right time. There is no such right time. Right time will never come. So you have to play the game. And again, from a retail consumer or a business consumer, anyone it is, the biggest and the best part is go slow and get into SIP route or an STP route where you invest at regular intervals without getting actually impacted at all when markets are high or markets are low, or did I miss the bus or did I not? Because a lot of customers are still not there in the market. They are still waiting on the fringes because they expect the markets will fall and that time I will enter. There are people who have already entered and they will of course reap the benefits. But I think at the end of the day, if it's a long-term investing, which I always believe it should be, then these ups and downs don't matter. You know that you have to stay put. You have a long runway. You have a long time which is available with you. You really don't need the investable surplus now and here on. You know that you have 5 years, 10 years where you can stay put and stay invested. Then let's stay invested and stay put, and I'm sure you will make decent returns.
But in general, practically as well, like say for example, now you mentioned, right? Again, I've come to this question. The reason is because I feel that there is still a little bit more that we can talk about. Like you gave an example about speaking to your relationship manager or fund manager, right? Say for example, your customer of ICICI, actually your bank, they give a call that, okay, you know what, a stock is at X price right now, and it might be a good idea for you to invest into this product or this stock. and we feel it will give you an X amount of returns. For some reason, I'm cautious. I feel, okay, yeah, Bhavya today is not feeling it. Let it be. I don't whatever want to do this today. Suddenly it starts rallying. It's gone. Now I'm not really sure whether I should enter or should I not enter. As simple as that. Bare basics.
So hence, again, for such a, if there is any confusion in terms of what stocks to buy, what not, I think the easiest part is to get the mutual fund route, because that's where the fund manager comes into play and he will do, rather than you decide what stock to go and what not. Because largely I've seen MF is the easiest and the most simple way to get into investments, and you end up making decent returns. So I would say there are many more such instances and such examples that would come, and you would end up making decent returns. But the only thing is, like they say ना कि यूं ही नहीं मिलती राह को मंजिल, यूं ही नहीं मिलती राह को मंजिल, एक जुनून सा दिल में जगाना होता है, एक जुनून सा दिल में जगाना होता है। पूछा चिड़िया से मैंने कैसे बनाया आशियां अपना, वो बोली भरनी पड़ती है उड़ान बार बार, तिनका तिनका उठाना पड़ता है. So it's like that तिनका तिनका उठा के you have to create that portfolio. You just can't create a महल on day one. You can't, and you will never. So if you want to create a महल, you have to go by that tinka tinka route, small investments through the SIP route or a lump sum route also, but stay put and stay invested in the long run. Believe in the India story and just stay put there. Don't get influenced by too much what's happening around you.
I like that boon boon se sagar.
हाँ, exactly. Boon boon se sagar बढ़ता है. You have to realize and take care of that. Every boon is important. It is not that कि हाँ आज मैंने कर लिया अब मैं नहीं करूँगा, फिर 10 दिन बाद I remember अरे ये भी investment का ये part रह गया. You never miss your EMI payments because of your bureau score and CIBIL impact. So similarly, never miss your investments. If that is something which has to get deployed in the market without you knowing, it should be automatically getting debited and deployed in the market. That's how it is.
Right.
So,
but how important is that also today? I'll tell you a simple example. I was actually reading, and like you said, like I consume a lot of whatever articles, I keep reading, try to educate myself regularly. And I was actually reading that somebody, especially like I have a 2-year-old son, you know, you also have it.
Yeah.
So they say that by the time he's going to be 20 or 30 or probably 25 when he wants to do an MBA, what is costing like maybe 10-20 lakhs today is going to cost about like 2 or 3, 4 crores. You know, at that point of time, which is, I mean, that is a number, and that's a number which is a good number, you know, in that respect. Do you see the trajectory, and that's why these investments are so important?
yes, of course.
Can they give that level of returns?
Of course, power of
20 years down the
compounding. I
line?
completely believe a power of compounding. It's the 8th wonder of the world, clearly. And the more you invest and stay put for longer duration, you will see the benefits in terms of power of compounding. First 2-3 years, you might not feel that your portfolio is growing, but after 3 years, 4 years, 5 years, you will see the portfolio jumping and getting doubled. So you will see, and for any goal that you have or anything, any dream that we have, all of us have, we live in a material world. We all want to buy a new large house, a big car, for an international vacation, and child education, of course. The kid has to go to a foreign university, whatsoever. And there are, of course, these are goals that everybody has and all parents have. So you should deploy and you should do a cash flow planning, a financial planning. And when it's financial planning, I believe it's very, very personal, and it varies from individual to individual, and everybody has their own set of goals, and there are funds which are available, and that will vary from individual to individual, how much you can deploy, what kind of lifestyle that you lead, and how much you can save, and that gets deployed. So some people tend to spend more, and hence the investable or a deployable surplus is far lesser, and hence to that extent they need to start far earlier and go for a longer run. Otherwise, there are people where they lead a decent life without getting into too much, and hence they have a decent surplus available. They invest, and there are specific funds I have seen people earmarking for specific goals as well. And these are those funds where keep plowing and keep growing. And NAVs have from right from what 10 rupees at the NFO launch have become 2000s and 3000s also. So those are the funds. But how many people stay put right from start of the fund till that time? I haven't seen many who would have stayed put so long. I think that's easier said than done. While we keep talking about patience and staying put, don't get impacted, have a balanced head on your shoulder, आप लगे रहो, डरो मत, be courageous. ये सब मतलब while these are all things that we try and educate, but people tend to get influenced, so much clutter. So cut the clutter, cut the noise, I think. And
you know, there's one term which has actually been in the news of lately a lot, and I'm sure you know what that is, and that's front running. So can you explain to our viewers what front running is and what is that concept?
to put it very simply, it's kind of a insider trading where you get some insider news, and basis that you put your individual trade before the large trades come into play. So if you are a fund manager, you know that this is what you are going to do, and hence you put your own trade before that, so that you benefit because you had that information. You were the front runner in that case because you knew that information ahead of the curve, and you individually also decided to play the game, which is very, very unethical in my mind and should not the right way to do at all.
Yeah, so it's what we call like the first mover's advantage, is it? Usually because knowing ahead of time and then trying
but
to.
First mover advantage is okay, but here you are using it to your own benefit. You're not using it to the large public benefit.
Understand.
And hence it is unethical, completely unethical, something which is not fair to the customer.
Right. You know, is insurance a good bet to be in, as in terms of like from a market perspective and even from general perspective?
See, honestly, if you treat insurance as an investment, I have my views, but from a protection perspective, clearly you should have a term plan which covers you clearly, and second, you should have a health insurance as well. So both on the life side you should have a term plan, on the health side you should have a health insurance to come into play, and which it should be a floater plan which covers you, your family, your kids, your parents, everyone. So health insurance, because of the kind of hospitalization and the expenses which are shooting up, what they used to be. Today if you go to any hospital, you will find the admission charges and the room charges, the doctor, surgery, everything has shot up so drastically. So you should have a good insurance cover, and that too from a provider where the claim ratios are excellent. Otherwise you keep struggling in terms of whether you get a claim back or not. And a decent size of health insurance. You should not be thrifty about taking a health insurance which is a lower cover. We should have a significant kind of a cover because the health expenses are really going the roof. So that is one. Second, a term cover is very, very critical, and you should have a term cover. Anybody and everybody who is the sole earning member in a family, we would always advise that the person should have a term plan, so as to take care of any exigency which can happen at any point in time, so as to take care of the family. So that is these are the two things that we always guide. Of course, there are investments, insurance plans being which get publicized as ULIPs, where there is an underlying investments which are there, of course coupled with some kind of a cover which is a part of it. But for investments, I would still say go the mutual fund route or go through the demat route.
Great. All right, thank you so much, Girish, for doing this and having this conversation. I hope you had fun. It was so good.
Thank you so much.
Yeah, thanks a lot.
Thank you so much.